Good evening, and welcome to the Town of Southbridge public hearing on tax classification. I'll read the statement. A public hearing is being held tonight by the Town Council on Monday, December 6, 2021 at 6:30 p.m. in the council chambers here at the Town Hall. This public hearing will be held pursuant to Chapter 40, Section 56 on the adoption of a residential factor for tax purposes and the adoption of percentages of the local tax levy to be borne by each class of real and personal property. Any person wishing to speak will be given the opportunity to be heard. I now ask Mr. Wilkenoya, the Town Assessor, to make his presentation.
Thank you, Councilor Daniels. Good evening. As he said, my name is Will Kenoyer. I'm the Principal Assessor and IT Manager. I'm here along with Fran Biscay and Diane Kokoska, the other two members of our Board of Assessors. This public hearing, I'm going to be brief. I'm just going to give a quick little overview so that anybody who wishes to speak has plenty of time after me. So there's just a few pertinent facts. This year's total town value, after adjusting all of our values, bringing them all up to full and fair cash value, totals $1,341,540. Of that, 78.1% is made up of residential properties, and the remaining 21.9% is made up of commercial, industrial, and personal properties. That's relevant because under Mass General Law, a town can shift their tax burden away from the residential class if they so choose, but based on those percentages, you're limited in how much you can do. So for the town of Southbridge, I believe, based on the math on all of that, it works out to, if we were to shift it to the maximum to the commercial, industrial, and personal property classes of 150%, that means the residential class would bear 86.01%, I believe the number is. Or we could shift it any amount in between, or we could not shift it at all. Not shifting at all would mean there would be a factor of 1.0, which means all classes pay the same percentage. If we do that, we've calculated the tax. Actually, let me back up just to here. This year's total 2022 tax levy is $24,006,111. If you do the math on that tax levy and the total town value that I mentioned earlier, that yields a tax rate this year of $17.90 per $1,000 valuation. That compares last year, it was $19.44. So the tax rate went down. The valuations went up. That's why the tax rate went down. Just a couple of quick things. So as I said, with a factor of 1, the average single-family property tax bill would be $4,265.84. We could shift it all the way up to that 50% if the town so chose, which would reduce the average single-family tax bill to $3,670. What does that come to? Approximately close to $600. But to do that, the average industrial property, for example, with a factor of 1, they would pay $12,039.52. If we shifted it the maximum, they would go up 50% to $18,059. Just one last little bit of information before I rest. So as I said, the average single-family tax bill is $4,265.84. That's simply the total value of all the single-family properties divided by the number of single-family properties. That's how you get to the average single-family value. And again, that tax bill would be $4,174.61. Compared to last year, that means there would be an increase of about 2.19% in the average. So that concludes my comments. If anybody has any questions, I'll be happy to answer them. During the council meeting, you'll be voting on these various factors and some things, and I'll be giving an in-depth presentation as well there.
Very good.
Thank you.
Are there any questions? Councilor Marchetti.
Thank you. So thank you very much for your presentation. It's been about 20 years now, I think, that I've been coming here and watching your presentation. I just have a couple questions. You wrote here that the commercial class parcel in the amount of $5,061,100 to an adjacent industrial class parcel, which increased by $5,587,800. I was just wondering what that was.
So the reason I put that in, because I think it's really notable, if you look at in that chart, the average commercial, because of that $5 million shift, the average commercial went down quite a bit, and the average industrial went up a little bit. The two parcels in question here are, the commercial one is the Hotel Conference Center, which was $31 million something last year, and it's gone down to $26 million. The parcel next to it, which is the Southbridge Business Park, was approximately $9 million something. I don't know the exact amount, but went up to about $15 million. So those are the two properties, and I just want to make note of it because it's considerable.
And how did it turn into an industrial?
It didn't turn into an industrial, but that value, the Hotel Conference Center went down by that amount, and the industrial park went up by that amount. So I just wanted to point that out.
Okay.
It didn't convert into just those two parcels.
And why would vacant land drop so significantly? I mean, we have got so many solar parks, solar farms on vacant land all over town, so why would vacant land suddenly not be worth as much?
So we're mixing things here. So vacant land, we're talking about vacant residential land, nothing to do with solar farms. And vacant land, the value of the land didn't go down. The value of the land was pretty stable. But in a rising market with the residential real estate going up in value so much based on the real estate market, vacant land didn't really change. So it stayed stable with its value. But because, as I mentioned earlier, the tax rate went from $19.44 to $17.90, so the same value of a parcel of vacant land applied to that lower tax rate. That's why you're seeing a lower tax bill for that vacant land.
I see. But wouldn't vacant land be worth something to somebody who wanted to put a solar farm on it, which would cause it to increase in value?
Yeah, a good question. So the majority of the vacant land that we're talking about is smaller parcels, 1 acre parcels or less. There are larger parcels, yes, but there was no evidence in the market based on sales that they had increased. Parcels that were developed for solar, this year I think we had 4 of them. The land was converted last year, and this year the solar was built. That land has gone up dramatically because of the use of solar. It changed from residential vacant land to commercial land based on the solar being put upon it. And that went up dramatically. And as you see in the presentation we get into a little bit later, that land that the solar is on is constituting a large part of our new growth, not a large part, but a significant part of our new growth and overall value to the town. So they're apples to oranges. Once solar gets put on, it becomes commercial land. And not just any piece of land can support solar as well.
We received a lot of COVID money this year. I would guess almost $4.5 million in COVID money. So why couldn't that be used to lower the tax rate?
I think that's outside the scope of what we're doing here tonight. This is classification and the numbers we have before us. Again, it's just outside the scope. It's not my area of expertise in this case to comment on that.
All right. Thank you.
You're welcome.
Okay, Councilor Steves.
Thank you, Mr. Chairman. Hi, Will. A couple of quick questions. One of them follows up on what Mike was just asking. I noticed in your report that you said that the personal property went up 52%. Is that mostly solar?
No, that's a lot of solar, but not. I would say it's not primarily solar. A majority is solar. Mm-hmm. Some of it is also some utilities, National Grid, and the other one escapes me. But we changed the methodology this year and how they're valued, and those went up very significantly. But I would say a large part of it is solar, but
Okay.
not all of it.
Okay.
But
And also, I noticed in your residential section, I was curious about, do you have any data on how many of those sales were to actual people versus corporations, LLCs, and other entities that might not be in town?
I can only speak anecdotally because I don't have that in front of me. There is some of the LLCs and real estate trusts, but I wouldn't say it's the majority of it. There is some. Mostly it's named people who are buying the properties.
Okay, I was curious about that. And I noticed when I was curious about the way the numbers are calculated, because when I was looking at the average numbers, you say the town average for this coming year is going to be 238, 315, and therefore the average tax is going to be 4,200, 65.84. So I wanted to take a look at what the comparison would be for our property. And then I noticed that according to the assessing records in the database, it said that our current assessment value is 201. But you scroll down to the bottom of the page, it also says it's for 2020, it's 188 too.
Right.
And so I was looking at that. I wanted to know why the difference. And I scanned through it. I did a bunch of other properties, and I noticed most of them have that similar difference. There were a couple that were the same, but most of them had a much higher number for the property value that's listed as current, despite the fact that they have the same dates.
So when we do the assessments every year, and in the actual presentation, I have a couple of slides which will really illustrate what's required, but we have to break it down by size of the house, age of the house, condition of the house, quality of the house, what time of the year it's sold, the style of the house, and many, many other factors. And we do that, and the market treats different parts of the real estate market differently in any given year. At some point, later in a market, like for example, and I'm not sure if this year illustrates it completely, but capes become very, very valuable because as prices rise dramatically, capes stay as one of the more affordable pieces of property. At other parts of the real estate cycle, the conventionals, the old houses we see downtown in Everett Street and Elm Street and Hamilton Street and those kind of streets, they don't take off right away in a real estate cycle. It gets to a point where suddenly they become much more valuable because they're more affordable to people. So every part of the real estate market picks up at a different time. When I give you the presentation, I have some information from the Department of Revenue on a couple of slides that'll really illustrate how we do it and why that happens.
No, my question though is that they're both labeled as a valuation year of 2021.
Yeah.
But there's two different numbers. One of them is 201,000, and the other one, if you scroll down to the bottom of the page on the town's website,
Okay.
it's listed also as valuation year 2021, but it has a total value of 188 too.
So one of those 2021s, the label is in error.
But I came across, I did 10 random addresses, and 8 of them were like that.
No. Across the website, that labeling in whatever spot has to be changed. I didn't realize that.
It's consistent.
Right.
80% of them look like that.
Right. No, I'm surprised it's 80. It should be 100%. So what happens is when we upload our new values every year, I have to change onto the website. I have to change the label on one of them, and you just brought it to my attention, and it occurs to me, I don't recall changing that. I wouldn't say it's a problem, Universal. I just made a mistake by not updating that. We only update our values to Vision, that website value, which is hosted by Vision Appraisal. They host a majority of their clients like that, and I just overlooked changing that label. If your property is 201,000 this year, I recall that number. 188 was last year, and
They're both labeled as 2021 though, and I
Yeah.
found that in 8 different randomly selected properties around town.
so all I
Only
can
2 of them were the same.
So I repeat, I made a mistake. I'll change it tomorrow. That's all I can say. One of them is labeled incorrectly, and it would be the one with the 201.
Okay.
That's all I can say.
Over town. Okay, thanks.
You're welcome.
All set? All set. Anyone else have any questions? Okay. It being 12 minutes to 7, at this time I'll close the public hearing. Public hearing is now closed.